welcome to the Link edition this week. Some of you were on holiday, and the holiday must end, and we must go back to business. And we are always here to give you information you can use. And this is April, and the budget is about to be passed by, I think, May 1st or thereabout. And that means there are tax issues coming up. Now we want to see, are there some taxes that will affect you? And my guest tonight is Miss Juliet Nagginda, who is the tax manager at PricewaterhouseCoopers. Juliet, welcome again to the Link.
Thank you, Sam.
When people hear the budget is coming, the current fuel prices we have are partly because of taxes, by the way, because they were increased sometime recently. And there are other issues. So on the general, tell us, Julie, what's the government's body language or tendency next financial year in as far as new tax measures are concerned? What do you read?
So, Sam, what we are seeing this time around with the tax proposals that have come out is that government is not really proposing new taxes.
Okay.
You will notice that most of the changes that are coming through are aimed at either removing the ambiguities that were existing in the various tax clauses, or streamlining tax exemptions, or ensuring that the digital measures that are being put in place by government to streamline compliance are being put to use. So we are seeing a lot of that as opposed to totally new tax changes in this coming year.
Okay, so things generally are staying the way they are.
Generally, there are a few changes here and there, some rates changing, going up, others being proposed to be reduced. But on a general perspective, we are seeing also a lot of clarification coming in on a number of clauses. So we expect that we are working towards getting a tax system that will be easier to implement and transparent and clearer for the taxpayer.
So government has been sensitive to our COVID cry.
Yeah, you could say that partly it's because of the COVID cry, but then the other thing we are seeing is that government is also at the back of its mind working towards ensuring that they achieve the pillars that they set out in the domestic revenue mobilization strategy.
Yes. You
know that in 2019, government set out a domestic revenue mobilization strategy, which was aimed at enhancing tax collection so that we reduce the debt burden on Uganda. So some of the things that government set out to do within that DRMS, the domestic revenue mobilization strategy, is that they are looking at having a tax policy which creates some bit of certainty, so that taxpayers know that when
I can plan, basically.
I can plan based on the proposals that have come through. Taxpayers know that when you rely on a certain clause, it's clear, there's no ambiguity. You don't expect that 2 years later the taxman is going to come and tell you misinterpreted it. Yes, so because of that, we are seeing a lot of clarity coming out. Then there's a lot of investment that has been made in the digital platforms, the likes of the IFRIS, the electronic fiscal reporting and invoicing system, the digital tax stamp. So we are seeing government really focusing on penalizing people who are not making use of those platforms as a way of closing the revenue gaps.
Okay.
Yes.
I do know that there are some tax changes that are coming. Let's focus on those doing business first. What are some changes that will inevitably come next financial year, if they are passed anyway by Parliament?
Yes, that's a very good point, because at this point we are really depending on the parliamentarians that in the House to determine which tax changes are going to come in place. But we've seen a number of interesting ones in the various tax heads, income tax, VAT and so forth. But some of the ones that have piqued a lot of public interest, you've heard of the withholding tax, the 10% withholding tax that's going to be applied on land, and a number of people have been asking under what circumstances am I supposed to pay the 10%. So this already within the Income Tax Act, there was a requirement to pay the 10% withholding tax. But it was not clear whether which business assets a taxpayer was required to consider when they are computing that tax. So now government is coming out to clarify that if you're looking at disposing a business asset on which that withholding tax should be applied, then the business assets are being defined to be taken as land which is held for use in a business and to generate income. So for example, if you're a business like your NTV, you have your land, maybe there's a building sitting on it, you're generating rental income on that based on that property, and you dispose of it, then the expectation is that if you're not exempted from withholding tax, then that withholding tax at 10% will apply. But then on the other hand, the government is also providing clarification on where that withholding tax should not apply. Because what we have seen previously,
I was going to ask you.
Yes, what we've seen previously is that almost everyone who was disposing land was worried on whether they should account for withholding tax. Yes, on whether. So now the government is coming out to clarify that if you're disposing of land and you're an individual, you had your land in PG, it had apartments or houses for tenants, you're generating rental income, then you're out of scope for purposes of that withholding tax. Then they are also coming out to clarify that if you're exempted, there's a list of exempt taxpayers on the URA website, and even if you're a business and you dispose of your land with some buildings on it, and that land has been used for generation of business income, then again you'd not be subject to that withholding tax. Then they're also saying that if you inherit, say your son, you inherit some of your land and then you pass it on to him by way of inheritance or by way of a gift, then again withholding tax would not apply. So that is a provision that was already there.
Let's go back, Julie. You mentioned, so who pays this withholding tax? Let's just go back. Only that. Who is going to pay under the proposal?
So under the proposal, it is the person who is the purchaser of the property, because they're the ones supposed to pay you. So they will withhold from you before making the payment.
Which category of those people who are going to, you said like NTV, if we have land and it is used for business, and there is some property, then we pay withholding.
Yes.
But individuals don't pay.
No, individuals don't pay.
Fantastic. People are saying, hey, what's that? I hope we get the clarification. Let's move on to something else. Rental income.
Yes, so rental income is another one that we have seen for the last 5 years. Government has been trying to tweak it around with a proposal almost year on year in regard to rental income. So last year we saw that the proposal that came through was welcome, the amendment that came through for rental income, because what happened was they allowed taxpayers a deduction of up to 75% of their income. So you are only being taxed on 25%.
Yes.
So to bring it home, assuming you are a landlord, either a company as NTV or an individual as SAM, and you had your property in which you're getting rental income of 10 million. So what they did last year is that they would only tax you on 2.5 million, being the 25% of the 10 million, and they would tax you on only that property, and you don't then effectively pay tax at a rate of 7.5%.
Okay, on the 2.5 million?
Yes, on the 2.5 million, they tax you at 30%, and then you'd effectively pay tax at 7.5%.
What's the change now?
But now they are changing that to say that if you are a company and you have land, and you have property from which you're getting rental income, then the expectation is that you're keeping your business records properly, so you have expenses which you can support, and so the taxman will expect you to only get a deduction for the actual expenses that you have incurred.
No percentages anymore?
No percentages, but then you can only get a deduction for up to 50%.
Oh, so now from 75 to?
To 50.
But provable?
Yes. So you have your 100 million, you're a business, you can only claim of expenses of up to 50 million, and those should be supported. It's not like last time where they would just slap 75%. Now for individuals, the change is that now they are taking away the requirement for you to get a deduction for any expenses, and whatever gross rental income you have, they tax you at 12%. So we are moving up from the 7.5%, the effective tax rate that we had last year, to now 12% for individuals.
Okay, we will do. Viewers, if you have paper, you better be noting these things. Some numbers, Julie, because of time we're running. Let's handle one more issue. The question of plastics That's very important. Let's handle plastics. What's with plastics?
So again, plastics is one of the proposals that came through last year, and government started imposing excise duty on plastics and plastic granules, at a rate of 2.5% or $70, whichever rate was higher per ton. Now, the challenge with that is that someone like Nice House of Plastics, who's making my basin or basins or buckets for children going to school, was also caught up in the excise duty bracket. And yet, if you remember, in the beginning, NEMA, in its bid to protect the environment, they fronted a proposal to government to start taxing Kavera, what we popularly call Kavera, the plastic paper bags. So what the government is now proposing is that to take away from the scope of excise duty the plastics that were not intended to be taxed in the first place, like your car. So they are bringing back now a clearer explanation that the excise duty will apply to sacks and bags of a certain category based on a certain chemical composition, so that then they can get back to taxing the paper bags for which this provision was intended in the first place.
So the tax was for environment, not just collecting revenue. And now they're taking it back to what it really, what threatens the environment primarily.
That's correct.
All right. During 30 seconds, if we can cover this, what do we know about the stance of government's aggressive tax administration? In terms of administration, what's their stance?
So what we are seeing right now is that government is really trying. One of the ways they are doing it is looking at the digital platforms that they've put in place. If you look at the Tax Procedures Code Act right now, a lot of it is focused on penalizing people who are not using digital tax stamps, or people who are forging those tax stamps, or people who are not using the electronic invoices. Enforcement. Yes, there's a lot of enforcement measures. We are seeing that government is now proposing that if you're not using the electronic invoices, they will temporarily close your business. But of course, now the question is, if they close your business, how will I get in to start using the electronic invoices?
They need to think hard.
Yes, plus then that means the business will be closed, so they stand to lose more, because I'll stop manufacturing, so they will lose VAT and everything else that I'll have made in the time when the business is closed. They are looking at if you're in construction, or in extraction industry, they expect you that within 7 days of contracting people, you're supposed to disclose those to URA. So you have a site, you need to go to URA and tell them, I have hired Sam to provide concrete, so that then URA can go after Sam. So they are really trying to widen the tax base by making use of the digital platforms, by making use of the people who are already on the tax brackets to ensure that they reach out to others, as a way of ensuring that we are all compliant in one way or another.
All right, Julie, can you imagine? I am dying to ask you more questions, but I can't because of time. Viewers, I'm going to bring back Julie soon. I promise. We're going to be discussing the budget questions, and she's going to come back here and we'll have more time. Watch out in June when we're discussing the budget issues. But I hope now you got the feel. No new major taxes. But if you're not complying, you are in trouble. That was the link. Thank you for joining us tonight.